If you're currently receiving Social Security or you're planning to start collecting it soon, what I'm about to share could be one of the most important things you hear this year. Because there is a hidden Social Security record that millions of seniors have never looked at. Not because it's secret, not because it's difficult to access, but because nobody ever told them it could directly affect the size of the check that arrives in their bank account every single month. And here's the shocking part. Many people discover mistakes on this record. Mistakes that have been sitting there quietly for years, sometimes decades. Mistakes that can reduce a Social Security benefit month after month without the person ever realizing it. Now, before you assume this doesn't apply to you, stay with me. Because later in this video, I'm going to show you exactly who is most likely to have one of these errors and why one particular group of retirees is finding these mistakes far more often than anyone expected. And if that's you, ignoring this could be costing you thousands of dollars over the course of retirement. My name is Robert Preston, and every week on this channel, we talk about Social Security, Medicare, retirement income, taxes, and the government programs that affect seniors across America. The goal is simple: to help you keep more of the money you've earned over a lifetime of hard work. Today we're focusing on a record that most people never think about until it's too late. And the reason this matters is surprisingly simple. Your Social Security benefit is not based on guesses. It's not based on what you think you earned. It's not based on what your last employer remembers. It's based on information stored inside the Social Security system. If that information is wrong, your benefit calculation can be wrong too. Now, I know what some people are thinking. Surely Social Security checks these things. Surely mistakes get fixed automatically. Most people assume that. But the reality is very different. The Social Security Administration receives earnings information from employers throughout your working life, year after year, job after job, decade after decade. Millions of records flow into the system. And while the system works remarkably well most of the time, mistakes still happen. A wrong number, a missing report, an employer error, a name mismatch, a reporting problem. Something that seemed insignificant decades ago can quietly follow you into retirement, and here's what makes this so important. The system doesn't necessarily come looking for you when something is wrong. In many situations, the person who discovers the problem is the retiree, the person receiving the benefit. Which means the difference between collecting the correct amount and collecting less than you earned often comes down to one simple action: checking your record. Now, let me tell you about someone I'll call Frank. Frank spent most of his career working in manufacturing. He started working in his early 20s, worked overtime, rarely missed a day, provided for his family, paid into Social Security for decades. Like many people his age, he assumed everything was fine. After all, why wouldn't it be? The government had his information. His employers reported his income. His Social Security check was arriving every month. Everything seemed normal. Then one afternoon, his daughter helped him create an online Social Security account. Frank wasn't expecting to find anything unusual. He was simply curious. But when they looked through his earnings history, something jumped out immediately. One entire year showed earnings that were dramatically lower than what he actually remembered making. At first, he thought maybe his memory was wrong. Then he found an old tax return. The numbers didn't match, not even close. That discovery started a review process, and eventually the record was corrected. The result? His monthly benefit increased. Not because he received a special bonus, not because Congress passed a new law, not because of a loophole. His benefit increased because the system finally reflected what he had actually earned. And that's why this topic matters. Because you don't know what you don't know. Most seniors never look. They assume everything is accurate. Sometimes they're right. But sometimes they're not. And if you're one of the people affected by an error, every month you wait is another month receiving less than you should. Now let's talk about the hidden record itself. Because this is where things get interesting. The record is called your earnings history. Think of it as a timeline of your working life. Every year you've worked and paid into Social Security appears on this record. The system uses those earnings to calculate future benefits. And here's the detail most people never hear. Social Security doesn't simply look at your last few years of work. It doesn't focus only on your highest paying job. Instead, it uses a formula based on your highest earning years throughout your career. That's why even an issue from decades ago can still matter today. a mistake from the 1980s, a reporting problem from the 1990s, a missing year from the early 2000s. Any of these can affect the numbers used in the calculation. Now imagine spending 40 years building a retirement benefit, then discovering that one piece of the information used to calculate it wasn't accurate. Wouldn't you want to know? Of course you would. And that's exactly why more financial professionals are encouraging seniors to review their earnings history before assuming everything is correct, because the stakes are higher than most people realize. A small difference each month may not sound dramatic, but over 10 years, 15 years, 20 years, the total can become significant. And remember, most retirees rely heavily on Social Security. For many households, it isn't just part of retirement income, it's the foundation of retirement income. That's why every dollar matters. Now here's something else that surprises people. The individuals most likely to find errors aren't necessarily those who worked unusual careers. In fact, many had completely ordinary jobs: teachers, factory workers, office employees, small business workers, healthcare staff, retail employees, construction workers, people who spent decades doing exactly what they were supposed to do. The reason errors appear isn't because someone did something wrong. Sometimes it's simply because information passed through many hands over many years. And the longer a career lasts, the more opportunities there are for something to go unnoticed. In a moment, I'm going to show you the specific warning signs that indicate you should check your record as soon as possible. And one of those warning signs applies to millions of Americans who don't even realize they're in a higher risk category. If that's you, you'll want to pay very close attention, because the next section could save you from overlooking money you've already earned. Before we go any further, I want you to ask yourself one simple question. When was the last time you actually verified the information that determines your Social Security benefit? Not estimated it, not assumed it was correct, not glanced at it, actually verified it. For many people watching, the answer is never. And that's completely understandable. Most Americans grow up believing that once taxes are taken out of their paycheck, everything happens automatically. The employer reports earnings. The government records them. Benefits get calculated. End of story. But retirement has a way of teaching us something important. Small details matter. A lot. Especially when those details affect income you'll depend on for the rest of your life. Now let's talk about the people who are most likely to discover an issue when they review their earnings history. Because if you recognize yourself in any of these situations, I strongly encourage you not to put this off. The first group is people who worked for small businesses, especially during the 1970s, 1980s, and 1990s. Back then, payroll systems were very different. Many business owners handled payroll manually. Records were kept on paper. Information was entered by hand. And while most employers did their best, mistakes were simply more common. A missed digit, an incorrect Social Security number, a reporting error. These things happened far more often than they do today. If you spent years working for a local business, a family-owned company, a small construction firm, or a neighborhood operation, your earnings history deserves a closer look. The second group is people who change jobs frequently. Think about it. Every time you started working somewhere new payroll information had to be entered. New records had to be created. New reports had to be filed. The more employers you had over the course of your career, the more opportunities existed for something to go wrong. That doesn't mean something is wrong. It simply means there were more chances for errors to occur. Now here's the third group, and this one surprises many people. Anyone who was self-employed at any point in their life. Maybe you ran a small business. Maybe you worked as an independent contractor. Maybe you owned a local shop. Maybe you did consulting work. Whatever the case may be, self-employment creates another layer of reporting complexity. Unlike traditional employees, self-employed individuals are responsible for reporting their own earnings through tax filings. And whenever reporting becomes more complicated, the potential for mistakes increases. I've spoken with retirees who assumed their self-employment years were fully reflected in their Social Security record, only to discover that certain earnings weren't showing up the way they expected. Now let's talk about the fourth group, because this one affects millions of Americans. Women who change their last name due to marriage, divorce, or remarriage. If that's you, pay especially close attention. Throughout a working career, names can change, but earnings records depend on information matching correctly. If earnings were reported under a name that didn't properly align with Social Security records at the time, problems can occur. Sometimes the issue is minor, sometimes it isn't. That's why experts often recommend reviewing earnings histories carefully after any name change. And here's the part that really gets people's attention. Many women don't discover these issues until years later, sometimes decades later. Not because they did anything wrong, not because they failed to work, not because they failed to pay taxes, simply because nobody told them to check. Now let me tell you about someone we'll call Susan. Susan worked for nearly 40 years. She raised children, helped care for aging parents, worked part-time during some periods, full-time during others. Like millions of Americans, life happened, marriage happened, a name change happened. Years passed. When she finally reviewed her earnings history, she noticed something strange. Several years looked lower than she remembered. At first, she assumed her memory was simply fading, but the more she looked, the less sense the numbers made. So she dug deeper. Eventually, she found documentation showing that some earnings had not been properly connected to her record. Once the issue was addressed, her benefit reflected a more accurate picture of her work history. Now, Susan's story isn't unusual because of the error. It's unusual because she actually checked. Most people never do. And that's what worries retirement experts the most. Not the existence of mistakes, the fact that so many people never look. Now there is another reason this earnings history matters, and it's one of the least understood parts of the Social Security system. Many people don't realize that Social Security calculations are heavily influenced by the number of years recorded on your earnings history. Here's why that's important. The system looks at years of earnings when calculating benefits. If earnings are missing, if years appear lower than they should, or if work isn't properly reflected, the impact can extend throughout retirement. That's why reviewing the record isn't simply about finding obvious mistakes. It's about making sure your working life is represented accurately, every year, every job, every contribution. And here's something most seniors never hear. Sometimes the problem isn't an incorrect number. Sometimes it's a missing year. An entire year that should contain earnings but doesn't. Imagine working full-time, paying taxes, building a career, then discovering that year appears differently than expected in the system. Wouldn't you want to know? Of course you would, because once retirement begins, every dollar counts. Now I want to pause for a moment and address something important. Some viewers hear conversations like this and immediately assume they're about to uncover thousands of dollars. Maybe, maybe not. The purpose of checking isn't to guarantee a larger benefit. The purpose is to verify accuracy. Sometimes you'll review everything and discover that every number is exactly right. That's fantastic. In fact, that's the best outcome, because then you'll have confidence knowing your benefit was calculated using accurate information. But if something isn't right, you'll have the opportunity to address it. And that opportunity alone makes the review worthwhile. Now here's where things become even more interesting. Because there is one specific section inside the earnings history that retirement professionals often focus on first. One area that can reveal potential issues faster than almost anything else. And it's also the section most people overlook. In part 3, I'm going to show you exactly what that section is, why it matters, and how some retirees spot potential problems within minutes of opening their record. I'm also going to explain one little-known reason some seniors accidentally reduce future benefit opportunities without realizing it. And if you're planning to work even part-time during retirement, that information could be extremely valuable. Because what you're about to learn next isn't just about correcting mistakes. It's about understanding how the entire system works in your favor. And once you understand that, you'll never look at your Social Security record the same way again. Now, let's get to the part that catches many retirees completely off guard. Because when people finally open their Social Security earnings history, they often make one critical mistake. They immediately look at the total benefit estimate. Then they stop. They never look any deeper, and that's exactly where opportunities get missed. The benefit estimate is important, but it isn't the first thing you should examine. The first thing you should study is the actual year-by-year earnings record itself. Why? Because the estimate is only as accurate as the information used to create it. Think about it this way. Imagine a builder constructing a house. If the blueprint contains mistakes, the finished house will reflect those mistakes. The same principle applies here. Your Social Security benefit estimate is built on the earnings information stored in your record. If those earnings are incomplete or inaccurate, everything built on top of them can be affected. That's why retirement professionals often start with the foundation. The earnings history, not the estimate. The actual numbers, year by year, line by line. And here's something fascinating. Many retirees discover potential issues within just a few minutes because certain patterns stand out immediately. For example, imagine reviewing your record and noticing a year showing zero earnings. At first glance, that might seem normal, but then you remember something. You worked that year. You remember where you worked. You remember driving to work every morning. You remember collecting paychecks. Yet the record appears different from what you recall. That's a clue. Not proof, but a clue. A signal worth investigating. Another example. Perhaps one year appears dramatically lower than the years around it. Maybe you earned similar wages for several years in a row. Then suddenly one year stands out as unusually low. Again, that doesn't automatically mean something is wrong. There could be a perfectly reasonable explanation, but it deserves a second look. And this is exactly why reviewing the record matters. Because nobody knows your work history better than you do. You lived it. You earned it. You remember the jobs. You remember the promotions. You remember the long hours. The system contains numbers. You contain the story behind those numbers. And when the two don't seem to match, that's when questions become important. Now let me tell you about someone we'll call David. David retired at age 67. Like many retirees, he assumed his Social Security benefit had been calculated correctly. After all, why wouldn't it be? The payments were arriving. Everything seemed normal. One day, a friend mentioned checking an earnings history online. David decided to take a look, not because he expected a problem, simply out of curiosity. As he scrolled through the years, one entry caught his attention immediately. It was a year during which he had worked substantial overtime. He remembered it clearly because it was one of the busiest periods of his entire career. Yet the earnings listed for that year appeared significantly lower than expected. At first, he questioned his memory. Then he reviewed old records. The more information he gathered, the more convinced he became that something wasn't adding up. Eventually, he contacted Social Security for guidance. And that's the key lesson. Not that he found an issue. The lesson is that he looked. Because without looking, he never would have known there was a question worth asking. Now here's another fact that surprises many people. Social Security records become even more important as retirement life expectancy increases. Years ago, retirement might have lasted 10 years for some households. Today, many retirees spend 20, 25, even 30 years in retirement. Think about what that means. A relatively small monthly difference multiplied across decades can become substantial. That's why retirement planning experts often say that accuracy matters just as much as investment performance. Because unlike market returns, correcting an earnings record doesn't require predicting the future. It simply requires making sure the past was recorded correctly. Now let's talk about another hidden opportunity that many seniors overlook. And this one has nothing to do with mistakes. It has to do with continuing to work, even part-time. Many retirees believe that once they start collecting Social Security, their earnings history no longer matters. But that's not always true. In some situations, additional earnings can still affect future benefit calculations. This surprises people because they assume the calculation is frozen forever. In reality, Social Security continues reviewing earnings records over time. And when higher earnings replace lower earnings from earlier years, benefits can sometimes increase automatically. Now, this doesn't apply the same way to everyone. Every situation is unique, but the key takeaway is simple. Your earnings history doesn't suddenly stop mattering the day retirement begins. Which is why understanding your record remains valuable even after benefits start. And here's where we arrive at one of the biggest misconceptions in retirement. Many people think Social Security is something that happens to them, something they have no control over. A check appears each month. They accept whatever amount arrives. End of story. But the retirees who get the most from the system tend to behave differently. They stay informed. They review their records. They understand their options. They ask questions. And most importantly, they verify information instead of assuming it's correct. That mindset alone can make an enormous difference. Now, I want to share a story that perfectly illustrates this point. A woman we'll call Carol spent years believing her Social Security benefit was fixed and unchangeable. The amount was what it was. Nothing could be done. That's what she assumed. Then, during a retirement workshop, she heard a speaker mention reviewing earnings histories. At first, she nearly ignored the advice. After all, she was already receiving benefits. What difference could it make? Fortunately, she decided to check anyway. That simple decision led to a series of discoveries about her record that she otherwise would never have noticed. And the experience completely changed the way she viewed retirement planning. Not because she uncovered some secret loophole, not because she found hidden money overnight, but because she realized something powerful. Information matters. The more you understand your benefits, the better equipped you are to protect them. And that lesson applies to everyone watching right now. Whether your record is perfect or not, whether you're already collecting benefits or planning to claim in the future, knowledge creates options, and options create confidence. Now, in the next section, we're going to talk about something that may be even more important than finding errors. We're going to discuss why millions of seniors accidentally leave benefit opportunities on the table simply because they don't understand how certain Social Security rules work. One of those rules affects married couples, another affects divorced individuals, and another can impact surviving spouses in a major way. These are opportunities that many retirees never fully explore, not because they're unavailable, but because nobody explained them clearly. And if you're married, divorced, widowed, or approaching retirement right now, the next section could be the most valuable part of this entire video. Because sometimes increasing retirement income isn't about finding mistakes from the past. Sometimes it's about understanding benefits that may already be available to you today. Now let's talk about something that catches many retirees by surprise. Because not every opportunity to increase Social Security comes from correcting an earnings record. Sometimes the opportunity comes from understanding benefits you may already qualify for, but never fully explored. And this is where millions of Americans unknowingly leave money on the table. Not because they made a mistake, not because they broke a rule, but because Social Security is far more complicated than most people realize. Let's start with married couples. If you're married, there's a good chance you've spent years focusing on your own benefit amount. That's normal. Most people do. They log in, see their estimate, and assume that's the number that matters. But Social Security often looks at households, not just individuals. And that's why understanding both spouses' benefits can be extremely important. Imagine a couple where one spouse earns significantly more than the other throughout their career. Many people automatically assume each person simply collects based on their own work history. But that's not always the entire story. Depending on the situation, there may be additional options worth reviewing. And here's what often happens. A couple retires. Benefits begin. Everything seems straightforward. Then years later, they discover there were strategies they never considered because nobody explained them clearly. Now, to be clear, everyone's situation is different. Eligibility rules matter. Claiming ages matter. Work histories matter. But the point remains the same. Never assume your first understanding of Social Security is the complete picture, because sometimes a conversation with Social Security or a benefits review reveals options you didn't realize existed. Now let's move to another group, divorced individuals. And if you're divorced, I want you to listen carefully, because this is one of the most misunderstood areas of the entire Social Security system. Many people hear the word divorce and immediately assume all connections to a former spouse disappear financially. But Social Security doesn't always work that way. Depending on the circumstances, certain divorced individuals may still qualify for benefits connected to a former spouse's earnings record. The surprising part, a huge number of people never investigate whether they qualify, they simply assume they don't. And assumptions can be expensive. I've heard stories of retirees who spent years collecting a smaller benefit because they never realized another option existed. Not because anyone intentionally hid information, but because they never asked, and nobody volunteered the answer. Now let's talk about widows and widowers. This is an area where emotions and finances often collide. Losing a spouse is one of life's most difficult experiences. The last thing most people want to think about during that time is benefit calculations. Yet understanding survivor benefits can be critically important. Why? Because the rules governing survivor benefits are different from the rules many people assume apply. And unfortunately, confusion often leads people to make decisions without fully understanding all their options. That's why experts consistently recommend learning about survivor benefits before they're needed rather than after. Knowledge gained today can prevent stress tomorrow. Now here's a question I want you to think about. How many retirees do you think have actually read the Social Security rules that apply to their specific situation? Not many. Most rely on assumptions, advice from friends, information they heard years ago, or something they read online once and never revisited. The problem is that retirement decisions deserve better than assumptions. They deserve facts. And that's exactly why reviewing your Social Security information is so powerful. The process often leads people to discover opportunities they never knew existed, not because the opportunities are hidden, but because they never took the time to look. Now let me tell you about someone we'll call Michael. Michael retired confident that he understood his benefits. He had spent decades working. He had a retirement plan. He believed everything was under control. Then, during a conversation with a financial counselor, he was asked a simple question. When was the last time you reviewed all your Social Security options? Michael didn't have an answer, not because he wasn't responsible, because he had never considered that there might be options beyond the benefit he was already receiving. That conversation led him to investigate further, and while his earnings record turned out to be accurate, he learned several things about his benefits that he previously didn't understand. The lesson: reviewing your Social Security information isn't only about finding mistakes. It's about understanding possibilities, because opportunities are often invisible until you know where to look. Now let's shift gears slightly, because there is another reason this hidden record deserves your attention. And it has nothing to do with money. It has to do with peace of mind. Think about how much effort you invested during your working years. The early mornings, the long commutes, the overtime shifts, the sacrifices, the decades spent contributing to the system. Wouldn't it be reassuring to know that all those years were recorded correctly? Wouldn't it be comforting to know that your benefit reflects the work you actually performed? For many retirees, that's exactly what happens. They review their record, everything looks accurate, and they walk away with confidence. That confidence has value, because retirement is stressful enough without wondering whether important information might be wrong. Now let's talk about another misconception. Some people believe they're too old to check. Maybe they're in their 70s. Maybe their benefits started years ago. Maybe they assume the window has closed. That's often not true. The fact that time has passed doesn't automatically mean a review isn't worthwhile. In fact, many retirees don't examine their earnings history until well after retirement begins. The key is understanding what your record says today, because you can't take action on information you never see. And that brings us to perhaps the biggest lesson of this entire video. The retirees who benefit most from Social Security are rarely the ones with secret knowledge. They're usually the ones willing to spend a little time learning how the system works. They ask questions, they verify records, they understand their options, and they refuse to assume everything is correct simply because nobody told them otherwise. That mindset can make a tremendous difference. Now in the next section, we're going to get practical. I'm going to walk you through exactly how to access this hidden Social Security record step by step. No complicated language, no confusing government jargon. Just a simple process that most people can complete in a short amount of time. I'll also reveal the specific warning signs you should look for when reviewing your earnings history and what to do if something doesn't seem right. Because finding information is one thing, knowing what to do with it is another. And that's where the next part becomes incredibly important. Now let's get practical. Because information is only valuable if you actually use it. And by this point, you might be wondering exactly how to access this hidden Social Security record and what you should look for once you find it. The good news is that the process is much easier than most people expect. In fact, many retirees spend more time deciding whether to do it than it actually takes to complete it. The first step is visiting the official Social Security website. That's ssa.gov. And I want to emphasize something important. Use only the official government website. Unfortunately, whenever money is involved, scammers appear. There are websites that look official, advertisements that appear convincing, emails that seem legitimate. Always double-check that you're using the actual Social Security Administration website before entering any personal information. Once you're there, you'll either sign into your account or create one if you've never done so before. For some people, This part takes only a few minutes. For others, especially if it's your first time, it may take a little longer. That's perfectly normal. The important thing is getting access to your information, because that's where the real value begins. After logging in, you'll find your Social Security statement. And inside that statement is the earnings history we've been discussing throughout this video. This is where I recommend slowing down. Don't rush. Don't skim. Actually review the information, year by year, line by line. Think back to your career, the companies you worked for, the periods when your earnings increased, the years when you changed jobs, the years when you worked overtime, the years when you ran your own business. You're not trying to memorize every number. You're looking for patterns. You're looking for anything that seems unusual, anything that doesn't match your memory or records. Now let's talk about the 3 biggest warning signs. The first warning sign is a year showing 0 earnings when you know you worked. This is often the easiest issue to spot. If you clearly remember working during a particular year, but the records suggest otherwise, that's something worth investigating. The second warning sign is a year with earnings that seem unusually low compared to surrounding years. Again, this doesn't automatically mean something is wrong. There may be a perfectly reasonable explanation. But unusual drops deserve attention, especially if they don't align with your recollection of that period. The third warning sign is missing information connected to major life events, name changes, career changes, periods of self-employment, anything that could have affected reporting. These situations deserve extra attention because they sometimes create opportunities for records to become incomplete or inaccurate. Now let's say you find something that concerns you. What happens next? This is where many people become nervous. They assume the process will be complicated, endless paperwork, long delays, confusing government forms. Sometimes it's much simpler than they expect. The first thing to do is gather supporting information: old tax returns, W-2 forms, pay stubs, employment records, anything that helps verify what you earned during the period in question. The stronger your documentation, the easier it becomes to demonstrate what actually occurred. And here's something many retirees don't realize. Even if you no longer have every piece of paperwork from decades ago, that doesn't automatically mean you're out of options. In many cases, additional records may still exist through various sources. That's why it's important not to give up simply because your filing cabinet isn't perfect. Now I want to share another story. We'll call this retiree James. James nearly talked himself out of reviewing his record. He assumed the process would be too complicated, too time-consuming, too frustrating. For months, he postponed it. Then one afternoon, he finally decided to sit down and look. What surprised him wasn't the process itself. It was how straightforward it felt once he actually started. The hardest part wasn't reviewing the record. The hardest part was taking the first step. And that's true for many people. The unknown often feels bigger than reality, which is why I encourage you not to overthink this. You don't need to become a Social Security expert overnight. You don't need to memorize regulations. You simply need to review information that belongs to you. Now here's something else worth remembering. Even if your earnings history turns out to be completely accurate, the process still provides value. Why? Because you'll gain a better understanding of how your benefits are calculated. You'll know where your numbers come from. You'll have confidence that your record reflects your working life. And confidence is incredibly valuable in retirement, especially when it concerns income you'll depend on for years to come. Now let's address another concern: technology. I know some viewers aren't comfortable using computers. Maybe you rarely go online. Maybe creating accounts feels overwhelming. Maybe you've avoided digital services altogether. If that's you, don't let technology stop you. Ask a trusted family member for assistance: a son, a daughter, a grandchild, a close friend, someone who can help you navigate the process safely. There's absolutely no shame in asking for help. In fact, many retirees review their records with family members sitting beside them, and sometimes those extra eyes make it easier to spot things that might otherwise be overlooked. Now I want to talk about something that may be even more important than everything we've discussed so far. Taking action. Because knowledge without action changes nothing. You can watch this entire video. You can understand every concept. You can recognize every warning sign. But if you never check your record, none of that information helps you. The opportunity exists only when action follows awareness. And that's why I want to challenge you today. Not next month, not next year, not someday, today. Set aside a little time, log in, review your earnings history, see what your record actually says. You may discover everything is perfect. That's wonderful. Or you may discover something worth investigating. Either outcome is valuable, because both replace uncertainty with knowledge. And knowledge is one of the most powerful financial tools any retiree can have. Now, in the final part of this video, I'm going to bring everything together. We'll recap the biggest lessons, discuss one final mistake seniors make when dealing with Social Security, and finish with a powerful conclusion designed to ensure you never ignore this hidden record again. Because after everything we've covered today, there's one simple truth that every retiree should remember. The money you've earned deserves your attention. As we wrap up today's discussion, I want to leave you with one thought that could completely change the way you view your Social Security benefits. Most people spend decades earning their retirement benefits. They wake up early. They work long hours. They raise families. They pay taxes. They contribute to the system year after year. Then retirement arrives, and somewhere along the way, many assume the job is finished. That there's nothing left to do except wait for the monthly deposit to arrive. But here's the truth. Retirement isn't just about collecting benefits. It's about protecting them, because no one cares more about your retirement income than you do. Not your former employer. Not a government computer. Not a stranger on the internet. You. And that's exactly why reviewing your Social Security earnings history is so important. Let's quickly recap what we've learned today. First, your Social Security benefit is built using earnings information collected throughout your working life. The accuracy of that information matters. Second, millions of Americans have never reviewed the earnings history connected to their benefit calculations, not because they don't care, simply because nobody ever told them to look. Third, certain groups face a higher likelihood of discovering issues. People who worked for small businesses, people who changed jobs frequently, self-employed workers, and women who experienced name changes during their careers. Fourth, reviewing your earnings history isn't only about finding mistakes, it's also about understanding opportunities, understanding your benefits, understanding your options, and making informed retirement decisions. Finally, perhaps the most important lesson of all, knowledge creates confidence. When you know your record is accurate, you gain peace of mind. When you discover a problem, you gain the opportunity to address it. Either way, you're in a better position than someone who never checks at all. Now I want to tell you about one final retiree. We'll call him Richard. Richard spent nearly 45 years working. Like many people, he trusted that everything had been handled correctly. And for most of his retirement, he never gave his earnings record a second thought. One day, after watching a discussion very similar to this one, he decided to spend a few minutes reviewing his information. Not because he expected to find anything, not because he believed something was wrong, simply because he realized he had never looked. What happened next wasn't dramatic. There was no massive surprise, no shocking discovery, no hidden fortune. What Richard found was something equally valuable. Confidence. Confidence that the information was accurate. Confidence that his benefit reflected his working life. Confidence that he had done his due diligence. And sometimes that's the greatest benefit of all, because uncertainty has a cost. When you don't know, you wonder. When you wonder, you worry. When you verify, you replace uncertainty with facts. That's a gift you can give yourself in a single afternoon. Now, before you leave, I want to address something that many viewers tell me. They say, "Robert, I'll do it later." And I understand. Life gets busy. Appointments happen. Family responsibilities appear. Days turn into weeks. Weeks turn into months. Months turn into years. But here's the problem. The longer you wait, the easier it becomes to forget. And the opportunity to review your record remains exactly where it is right now. Waiting. That's why I encourage you to make today the day. Not because there's a deadline tomorrow. Not because you should panic. But because important financial tasks rarely become easier when postponed. Take 20 minutes. 30 minutes, an hour if necessary. Log in, review your earnings history. Look at the record that helped determine one of the most important income sources in your retirement. You earned those benefits. You deserve to understand them. And if you discover everything is accurate, wonderful. You'll sleep better knowing you checked. If you discover something that deserves attention, you'll be grateful you took the time to look. Either outcome is a win, because both outcomes give you something valuable. Certainty. Now let me leave you with one final question. If there was even a small chance that a record connected to your retirement income contained information worth reviewing, wouldn't it be worth one afternoon of your time? I think most people would answer yes, and that's exactly why this hidden Social Security record deserves your attention. Not because it's complicated, not because it's secret, not because it's guaranteed to change your benefit, but because it's yours. It's your work history, your contributions, your retirement, and no one should spend decades earning a benefit without taking a moment to verify the information behind it. Thank you for spending part of your day with me. My name is Robert Preston. If you found this video helpful, take a moment to subscribe and turn on notifications so you don't miss future updates about Social Security, Medicare, retirement income, taxes, and the government programs that affect seniors across America. And before you go, I'd love to hear from you. Have you ever checked your Social Security earnings history, or is this the first time you've heard about it? Leave a comment below and let us know. Your experience could help another retiree who may be wondering whether they should check theirs as well. Until next time, take care of yourself, take care of your finances, and never stop making sure the money you've earned is working for you.